The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. 24 minutes to go until the opening bell, and we got markets kicking things off to the positive side yet again. Yesterday, pre-market, we make a high of 39.48. We got some negative action throughout most of the trading day, a little bit of volatility in both directions. We kick off today basically almost right where we came into the opening bell yesterday. S&P's right now catching a little bit of a bid even in the last 15 minutes. You see where we're trading, 39.22. You're positive by 18 points. It's a solid 0.5% right now in the S&P. NASDAQ 100, you're positive by 37 points, up about 1/3%. The Dow up about 0.5% as well, 31,585. And the Russell positive by 12 points. Bitcoin hovering right at about 21,000 right now. You got crude. So much for the lows of 101 last week. We're trading at 111.33 right now in the price of crude. You got gold contract negative by $1 right now at 18.23. Silver's basically flat at 21.19 for silver. And we jump to notes and bonds. A little bit of lower price and higher yield. We got the 10-year right now. You're talking about a yield of 3.22%. Pretty remarkable when you think. I think it was Thursday that we were coming into. I do my program, of course, 9 to 10 o'clock in the morning. You had rates rocking on Thursday, man. I thought we were going to hit a 3% yield on that number. We almost got a two-handle. And just like that, you have the 10-year trading lower by almost 2 full points from the highs that we had just Thursday. From 118.08, you reached this morning a low of 116.11. Right now, you catch a little bit of a pop. We're trading 116.21. The 10-year right now, 3.22%. And we jump over to the Vex Volatility Index this morning, 26.86, right back to the lows of where we were on Friday. You take a look at a longer-term time frame of the VIX. Let's pull out the spike high that we had when COVID first began. And it would seem like that high at 35.05 might be a at least near-term, intermediate-term high in the market for the VIX as we've pulled back a bit. You see the spikes, the series of spikes in terms of where we've been. Absolutely remarkable that you have not seen a VIX below 1845 since the beginning of the year. That is mind-blowing when you think about where the VIX was for so many years, folks. 2017. I mean, look at this. I'm just zooming in on 2017, okay? 2017, the high for the VIX throughout the entire year was 1728. Let alone we have spikes in there, and most of the year you can see that the body of these candles was basically under 11, under 12. You had one candle that got as high as, what is that? The body, 1256 or so. You get the point, right? Sustained levels of volatility as we haven't seen a VIX as low as the VIX was, didn't even see a high from many parts of many years going back as this market just drifted higher. But nonetheless, we'll see how that trades. We jump back to some of the stories this morning and we'll kick it off with the headline. China, that they're going to cut the quarantine. The dollar rises and the markets, that is their wrap. So China shortens the isolation time for inbound visitors. You have oil gaining with commodity-linked currencies. And yeah, so China is going to be pausing some of their shutdowns. You have casino shares, travel stocks. You have Disney trading a little bit higher. Their Shanghai is going to be back. Disney Shanghai is going to be back opening as well. China cut in half the time new arrivals must spend in isolation. The biggest shift yet for a pandemic policy that has left the country isolated and fueled economic concerns. You got iron and copper reversing losses. Oil gained amid risks of supply disruption. So it'll be interesting to see how that plays out with China. But Disney opening back up, you catch a little bit of a pop there as well. And yeah, they talk about a number of different things in there, but that'll be interesting to see how it plays out because China, a pretty integral part of everything going on in this market. For instance, we jump over to Disney. I got a bunch of notations on this chart, but let's see the short action. Yeah, Disney's going to be up $3. It's a big deal. And there's your pop on that news for Disney overnight. You're trading at $98, $99 right now for Disney shares in the overnight session, as they will be reaping the benefits of China opening back up with Disney Shanghai. I think they're opening back up in a couple days, just that quick. Things open back up. Nike had their numbers last night after the bell. Strong numbers, but a little bit of a disappointing guidance about the coming quarters. Let me see if I can find the articles. I had a couple articles pulled up here with some interesting headlines. I may have to find them again. Let's see if I got them up. Yeah, I sure do. So here, I'll show you a couple headlines in terms of what's coming out for Nike, because they had some strong numbers they beat, but it's all about guidance and where we're going. And first, we'll kick it off with the Straight Out News article on Nike. So skids on downbeat forecast amid cautious China stance. So they offered a muted full-year expectation for gross margin. Shipping logjams continue to vex, boosting inventory levels. Not what you want to hear, right? Sales in the Greater China region fell 20% in the quarter at constant currencies and missed estimates. COVID shutdowns hurting that business in a big way. So that is the China story, okay? But check out an opinion piece that's up on Bloomberg at the same time. Slowdown in the U.S. should worry investors. Saw sales slow in its biggest market. That's going to be worrying as shoppers rein in their budgets. And they even talk about the sales slump in China is capturing the attention at their own news outlet, Bloomberg. It's capturing the attention, okay? Cautious China stance is the headline. But Andrea Felstad, not familiar, an opinion writer over at Bloomberg, talks about that on a 20% fall in the sales, excluding currencies, okay, as COVID-related disruptions affected 60% of its business in the country. But even as Nike announced a new $18 billion four-year share buyback program, the company said it expected group sales to increase by a percentage to the low double digits this year, and for gross margin to be flat to down 0.5 percentage points. And here's the kicker from North America. North American revenue unexpectedly fell 5% in the company's fiscal fourth quarter. Footwear sales fell by 6%. Sports apparel down 5%. It's a common theme, right? Target, the likes of retail, pushing out some of those same products. Although this compares with the period a year ago when sportswear sales were on a tear, the decline is worrying nonetheless, particularly as North America is Nike's biggest market, with sales accounting for about 40% of total revenues. 40%. You don't want to see a slowdown where you're doing 40% of your business, folks. So that was the drop-off during the earnings call. The numbers, strong numbers, you spiked to 115, and just like that, though, they give it back on the earnings call. You're down to 108. You're down $2.50. Nike had about a $9 move priced into their earnings for just that earnings event. So pretty muted reaction. You do spike higher, but only $2-3 in terms of movement. Now, you take a look at Nike, okay? We did have a trade in my newsletter, Rocket Equities and Options. Folks, if you want to try it out, check it out under the newsletter tab on the front page of TFNN. We sold a put spread. Sold a credit put spread below the market from about 105, from 105 to 100. Okay, and what I'll do is I'll pull up the chart so you can take a look at that. And this will probably be like a break even to a slightly profitable trade. We're probably going to close it out at the open. I don't want to ride this out for the rest of the week, risking almost $3 for every dollar in potential profit. But the reason why I was going to that price level is, number one, you got Nike bouncing off the 618 on a couple occasions back here. Okay, so maybe that's an area that you're finding support. You have that 618 correlating to the highs you had in June of 2020, that high 104.69. And that's also correlating to the highs you had pre-COVID of 105.62. So maybe 105 is an area Nike finds support. Stay tuned, folks. We'll be coming back. We'll be talking to our man Kevin Hincks from TD Ameritrade Network. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Welcome back, folks. Got something funky going on. That was a short break, and hopefully I'm back here. We got the S&P's up 17 points right now. You got the NASDAQ up 33. The Dow charging up 159 points right there, trading at 31,579. You got the Russell up by 12. So jumping back to Nike real quick. Nike shares trading at 108, down from 110.50 right there. Yeah, we'll see how they trade on the open. All right, let me jump around to what else I have pulled up here. Getting my screens in order. Home prices. So home price increases slowed for the first time in months in April, says S&P Case-Shiller. And what's interesting is I'm pretty sure this is like a 3-month average is how this takes. So you're going to see a little bit of a lag potentially in that number. Prices rose 20.4% nationally in April compared to the same month a year ago. Absolutely remarkable. In March, that number was 20.6. So your slowdown, folks, is 20.4% nationally. That you have home prices rising in a change from the last 5 months when most of the 20 cities saw month-to-month gains. Only 9 cities saw prices rise faster in April than they did in March. So not too surprising with where rates are in this real estate market. Shouldn't be shocked to see that market easing a bit, to say the least. All right, let's jump over to our man Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network, with the program Fast Market. Your host, Kevin Hincks, Tom White. They break down the day's market action, do an outstanding job, folks. They walk you through hypothetical trade setups, talking about options, talking about defined risk in a very volatile market, to say the least. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Happy Tuesday. This is a market that is got a lot of things going on this week. Ahead of a holiday weekend, it's, the last week of the quarter, last week of the month, and things are starting to grind down here as we get to the end of the second quarter, beginning of the third quarter. Remember, we're in that kind of chasm here. We do have a couple more earnings out this week. Micron later in the week, Bed Bath & Beyond that we'll cover on today's show. But all things considered, Tommy, traders right now should lower their expectations for what they think the market's going to do. You've got VIX starting to grind slightly lower here now, down below 27. Not sure how much lower VIX will go with everything going on in the world, but certainly some easing as, this is getting kind of interesting, Tommy. The overall look at inflation and what the economy's doing right now, Friday's big run-up, yesterday's really inability to sell them off, this is starting to get interesting, Tommy. If we're at peak inflation, as the whispers are starting to come out, then Jerome Powell maybe can take his foot off the brake slightly on interest rates. I think this summer is going to be a fun summer to trade, Tommy.
That's for sure, man. These volatile markets, and to what you're saying, Kevin, right? You had that charge higher Friday, and I found myself Sunday night for the futures saying, oh, what's going to happen, man? Because so often, right, you've seen the give back, man. Every single market rally, at least like the ones we've had on Friday that were just dramatic, very hard to sustain that rally for this market. You've seen some huge give backs the following day. Yesterday, even just holding on to the big gains that we had on Friday. Today, we're up about 18 points. It looks like China easing some of their lockdowns. Disney trading a little bit higher. Anybody doing business in China probably going to get a little bit of a lift this morning. Some of those crude prices, though, inching back up. Kevin, crude back to 111. We got the 10-year yield back to, I think, 3.22%. Nike had some decent earnings out there, but guidance a little bit weak, and they're off about $2.50 on their earnings call. What'd you think of the Nike numbers? Pretty decent numbers, but they got a little bit of a slowdown potentially in China and in the U.S. They're their biggest market.
I think with all the things that was probably thrown at Nike during this quarter, I think they put up pretty solid numbers. And, the fact that the stock's down this morning is kind of interesting. You remember, we put on a trade that is profitable in either direction if it moves. So we're going to watch that kind of closely today. But, yeah, I thought Nike, remember, for Nike, I really think the evolution of Nike is in their growth of direct-to-consumer and how they're moving away from the stores and more to online. And remember, when they do that, when they cut out that middleman and that brick-and-mortar retailer, their margins explode. Because they keep all the money. If they sell a pair of shoes for $100 online versus in the store, the difference in margins is enormous, Tommy.
Yeah, it's pretty cool. They've had some, and I lose track of which quarter it was in, man, as time flies. But over the last year and a half, 2 years during COVID, they put up some pretty strong numbers. And some of those quarters, I remember being pretty surprised by the raw numbers that they're doing direct to consumer for a company like Nike. Foot Locker trading dramatically lower on some of those impacts on the potential that Nike going to start selling shoes directly to the consumers and cutting out that middleman, one of which is Foot Locker. You talked about one of the equities you're going to be talking about on the program today, Kevin. You mentioned it was pretty surprising this week, actually. I looked at the schedule and said, we still got a few companies coming out with the numbers on June 28th as we wrap up the quarter. What are you guys chatting about at Fast Market coming up at 12 today?
Based on your China discussion, Tommy, we're going to look at Wynn Resorts. They're heavy into Macau. As you know, they make a lion's share of their money in China. So we'll look at Wynn Resorts in the first segment. Then, like Folio, will do their presentation on Bed Bath & Beyond. And then finally, we'll look at eBay, the online retailer, and see what they have. We're going to look at them long-term, how they're making it through this shift to e-commerce.
Yeah, pretty cool. And I got Wynn up here on the Thinkorswim platform catching a bid, as any company going to be doing business in China, as you mentioned, from about $57.69 to $61 and change. But, boy, you talk about a pullback, man. This thing, going back, I got to go back to a 3-year weekly. What were we trading at a year ago? $140 almost. In March of last year, we're trading at $57.61 this morning. It's always amazing, Kevin. I'm going to try and find it after this break because I've seen it put on a chart. The gambling revenue in Macau versus the gambling revenue in Vegas. We think there's a lot of gambling in Vegas. Not even close, folks, in terms of the numbers that they do in Macau for gambling. So, yeah, I imagine that may have an impact for sure.
Yeah, that's why, Tommy, Wynn Resorts is so dependent on Macau and China. As their Las Vegas Sands does a lot of business there. I mean, Macau is it does more business now just look at the numbers that Macau does versus Las Vegas. It's incredible, the appetite that Macau has for gambling.
I'm going to find one of those charts for the listeners, Kevin. We'll say goodbye to you this break, but I got to pull them up for them because I'm already Googling on the other side of my screen right now. The first one I found was to 2014. But, folks, it basically looks like Vegas gambling revenue is at zero and Macau just going straight through the roof, talking just multiples in big ways. Well, Kevin, we appreciate the time you take every day with us, man. We appreciate the education, and we'll be watching at 12 o'clock today for Fast Market. You have a great one, man.
Have a great day, Tommy. Thanks for having me on.
Always a pleasure. You too. Folks, tune in every trading day, 12 noon Eastern time, Fast Market. And we got a Fast Market right now for sure. Excuse me. Okay, jumping back to the S&Ps right now. I wanted to take a look, a little bit longer term time frame. I sent out letter from my subscribers yesterday, and one thing I wanted to talk about here is confluence across the board on all these markets, all right? So I'm going to go super long term. We only have about 2 minutes left in this segment. I might finish it up when we get back from the opening bell. But confluence, folks, takes place when you have two different Fibonacci retracement zones from different trends that coincide in the same area. Okay, now I'm going to take two different trends. I'm going to take the long-term trend, which goes all the way back to the lows of 2009. So you're talking about basically the entire bull market run, right, from the lows. Now in the S&P, that low took place in March of 2009. In the NASDAQ, especially the NASDAQ 100, that low actually ahead of that number. Okay, as in the NASDAQ bottomed first, and they were both kind of near those levels, but the NASDAQ technically bottomed first. You'll see it on the chart. And you have the longer term trend. So I'm talking about the 382. Now this is going to be the same on all these charts, all right? We're going to come into the break. We'll finish it up when we get back, but you're talking about the 382 of the longer term trend, and then you're talking about the 618 of the shorter term trend, which is the run that the markets have had from the lows of COVID in 2020 to the highs to kick off this year. And what you're going to see is the 382 of the longer term trend and the 618 of the shorter term, they all match up pretty close to the same area. You want to have those areas on your chart. We'll talk about when we get back. Stay tuned, folks.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets open. S&Ps open up about 20 points to the upside. You got Nike opening up at about 107.50, down about $3 on their numbers from last night. And we jump around to the S&P as I was talking about on a longer term time frame here. Checking out the 3-year. No, I got to go back further than that. Excuse me. The long-term monthly. So again, understanding this, because if you follow Fibonacci numbers, folks, it should make sense, right? The 382, the 618, those are levels that I like myself. When you have those levels coinciding from two different trend lines, you should watch that area, to say the least. Now, that area in the S&Ps, okay, basically 3,200. And the cool thing about that is your 382 of the larger trend comes in at about 32.28. Your 618 of the shorter term time frame comes in at about 31.77. So you have about a 50-point S&P range that those come in at. It's kind of right where you kicked off 2020 as well. Pretty cool action, 3,200. I mean, I hope we don't get down there, but you got to have areas on the chart that at least you're looking for potentials, folks. And, you know, if you think that that's not happening, wait till you see how close we got in the NASDAQ 100 to that price level. Okay, you jump over to the NQs, same exact thing. Now, in the NQs, as I mentioned, the lows were actually late 2008 in the NQs. Now, it was still sputtering around in the beginning of 2009 as well, but technically, you had the low made, I think, in November of 2008 at 1,017. You run from that number to 16,767. Now, the 382 of the entire move, now, that's almost a 16,000-point run from 1,000 to 16,767. You say, oh, my goodness, could we ever get back 382 of that full run? Come on, that seems absurd. Well, guess what, folks? That number is 10,751, and we got within about 300 points of that price level. So the NASDAQ 100 already almost hit it. You got within 300 points. Now, that area in the NASDAQ 100, about 10,751 to 10,500. So you're talking about a 250-point range in the NASDAQ 100, and as I mentioned, you basically almost got right there. Cool part about that, these areas correlate to other charts, other areas on the chart. Now, doesn't quite correlate the way the S&Ps did, okay, which was coming back to where you kicked off 2020, so that would put it at about 9,000, but it is an area that acted a bit as support in the end of 2020. Nonetheless, we almost got there in the NASDAQ 100. If you don't think we can do it in the S&Ps, folks, we still have a period of extreme volatility waiting for us in this market. You jump over to the Dow, same exact thing. You go from 6,000 to 36,000. The 382 in the Dow, this one's got quite a ways to go. You're talking about 25,000, just above that price level in the Dow. That's a solid 7,000 points. Hope we don't get there as well. But put it on your chart, folks. There's nothing to say that that's impossible. During COVID, just so you're aware of where we got, that spike in the Dow that brought us down to 18,000 almost, yeah, that got us back to prices that you hadn't seen since 2015. You talk about givebacks in no time. Okay, that was the 618 of the entire move. Now, where we are, as in you got back to that price level. All I'm talking about is the 382. That'd be 25,000 in the Dow. So keep them on your radar. We're catching a little bit in a boost in the market right now. But yeah, 3,200 in the S&P. Pretty cool that they all line up pretty close to each other in terms of the 382, the 618, and how they're going to move. Let's jump around, see how that Nike's trading. Catches a little bit of a lift back to 110. Just that quick for Nike shares to 110.26 for Nike. Dow right now up 387. Look at this market, man. Strong market in a big way. You get the gold contract right now flat at 18.24. Crude sitting up at about 110.65. And we check in on notes and bonds right now. You're looking at a 10-year. Excuse me one second. Let's get that yield up. 3.22% sitting right there. All right, jumping around to one of the other articles that caught my eye. I think this one was out yesterday. Michael Burry. He's usually talking about getting all the headlines about the market falling apart, but this time he's going the other way. He's saying that, you know what? The Fed might have to ease things, man. Don't be so quick to say that, you know, all hell's breaking loose and the Fed's got to hike forever. He sent out a tweet yesterday talking about supply glut at retail is the bullwhip effect. Google it, worth understanding for your investing endeavors. Deflationary pulses from this. Disinflation and CPI later this year, and Fed reverses itself on rates and QT, and that's the cycle that the market goes through. And the article he was referencing that I took a look at yesterday, just keep your returns. Stores Way paying you not to bring back unwanted items. What's interesting is I was checking out this story. Companies have to pay between 15 cents to 30 cents on the dollar for items that they return. Now, we all know that they have costs. Some of the things that they do, if the items are in good enough condition, they put it back on the store. But what they also do is they can sell those products to foreign liquidators for sale in Europe, Canada, and Mexico. But what's going on with the ports right now, that option much more difficult. For every dollar in sales, a retailer's net profit is between a cent to 5 cents. Okay, those are the margins. With returns, for every dollar in return merchandise, it costs that retailer between 15 to 30 cents to handle it. So if you buy a $20 shirt at Target and you go to return it, it's going to cost them, what, $3 to $6 to process that return? It seems like an astronomical cost when you're talking about the number of items that they go through. But nonetheless, they have so much inventory right now. I'm not sure you're going to see any big ticket items. I have had the occasional item on Amazon where you get a returnless refund. You go to return something, maybe it's something that costs you $3, right? By the time Amazon allows you to ship it back, they sell it. They're actually losing money on the product. They say, here's your money back, and just keep it. Just keep it. It's a returnless refund. It has happened. But this one caught my eye a little bit more. As in Burry, he's a bright guy, and he's seen some things coming in this market, and not often does he say, hey, everyone might be a little bit too worried about the market sell-off. He was early in May. A tweet raised the issue of a 2008-like crash. It's only June, but maybe the Fed's bringing enough, and maybe he's talking about seeing some of the impacts, because it's going to matter, folks. When they have all this supply glut in their merchandise, you're going to see sales. Those sales are going to bring down the costs. Those costs are going to be reflected in CPI. They're going to be reflected in, what did he say? Deflationary CPI, and the Fed is going to factor that in if that starts hitting the market. So worth mentioning. We'll see how that plays out nonetheless. All right, let's see what else I have up here. I could not find anything good enough. I'm going to keep searching for Las Vegas versus Macau revenue. Couldn't find it just yet. One thing I did find, I was looking at some of the size of Macau versus Vegas, all right? Now, these are just random articles, but interesting. And this is a recent article from casino.org. They're probably a little biased about pumping casinos, but nonetheless, you talk about rooms, okay? Macau, 113 hotels, 37,000 rooms. They got 47 budget motels or hostels with 1,500 rooms. That sounds impressive until you compare it to the 148,000 hotel rooms in Vegas, of which only 93,000 are at hotels on the Strip. 93,000 Strip hotels, each hotel averaging 2,000 to 3,000 rooms, which is why it's easy to believe. The MGM Grand says when they wash an average of 15,000 pillowcases a day. You better wash it, man. Those casino rooms. Watch out. Nonetheless, interesting stuff. I'm going to try and find that gaming revenue again, folks. Stay tuned. We'll be talking a little bit markets when we get right back. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks, and we got the markets climbing a bit. Jumping back to the S&Ps right now, you're up about 42 points. Trading at 39.46, you spiked to 39.50, quite a move. NASDAQ 100, you're up 122. So highs of the week that we came in terms of pre-market Monday, we're about 100 points from there on the NASDAQ. S&Ps actually just eclipsed that level. We make it to 39.50. You have the Dow trading above that level as well, 31,867. The thing I'll say about the S&Ps, folks, 4,100 to 4,200 is going to face some heavy resistance if you get up to that level. Okay, not calling for it, but you do want to be aware of potential moves that you can have in this market. I'm going to put things back to a little bit of a shorter term time frame. Just the run that we had recently. Okay, let's check this out. From where you were in March, you're talking about the 618s at about 42.50. The 382 is at about 4,000. We're sitting right now at 39.41. The recent high in May, folks, you get back up to 4,200. What do you think people are going to be thinking about if we're back at 4,200 and we're still dealing with these inflationary tendencies, right? They're going to be thinking, hey, we were just sitting at 4,200, and just like that, the market sold off to 3,600. You're going to be facing some headwinds, and also that area going to correlate to the lows that we had back in May when you caught that bounce up to 4,600. Risk reward, very dicey here, sitting at 4,000 in this market. I say 4,000, we're at 39.41, but you got to keep in mind, folks, S&P is up exactly 300 points off of the lows. You're talking about 8% pop in less than a week, and meanwhile, we're still well off where we were just trading a month ago, right? Keep that in mind as this market chops around today as we come into the long weekend. And don't forget, we have some economic data coming down the line later this week. What is it? Core deflator, PCE coming out Wednesday, I believe. We got some earnings coming down the line as well. Nike's got some volatility right out of the gate. We were able to sell that off. So I mentioned we had a put spread, and let me pull this up because this is a cool trade to think about, folks, and this will give you some action. So in terms of understanding the option market, these are the types of trades that Kevin Hincks and Tom White that they talk about on Fast Market. Okay, at 12 noon Eastern time, if you're getting into the options market or you just want to understand it, okay, here was the trade placed yesterday. So you had Nike trading at about 110 and change, I think, at the time of this. It was yesterday afternoon. Let me jump back to the Thinkorswim platform. And look at the volatility, right? Nike spikes to 114. So the recommendation was to let this kind of open and close out the put spread. You probably got about 35 cents if you were in this trade, as in you had to pay. So here's the trade. What I love about Thinkorswim, folks, is that they put things visually. Visually, a very easy way to understand things. Up, is my chart up? There we go. That'll probably help, wouldn't it? Okay. Here is a chart of the trade. So what you're doing is it's a put spread. So Nike's at 110. The methodology here went that you have Nike trading in an area where potentially, I walked through it earlier, potentially that 105 area correlates to the 618 of its entire move. It correlates to where you were pre-COVID. It correlates to an area that you caught a bid. So I said, you know what? I think Nike has some action here with support potentially at 105. They've already pulled back from 180. Okay, you're basically at pre-COVID levels. Yes, there's always the possibility this thing trades one way or the other, but we're in the gambling business, folks. I said, you know what? I'm not sure we're going to get a pop to the upside where I'm bullish, but I'm going to sell some premium in the market from 105 to 100. So what I did is I sold a 105 put, and then I bought the 100 put, which kind of caps your losses is a way to look at it. You combine those two, and I collect a credit of $1.26. We'll call it $1.25. Okay. Now that credits your max profit, folks, which is why on this chart you'll see that $125 is where your max profit line caps out anywhere above 105. Well, at the time, Nike's trading at about 110. Okay, so I got $5 cushion to the downside that I max profit this trade. That's if you hold till Friday. We got a lot of volatility going on, so I didn't want to hold till Friday with Nike trading at about 107 or 108. Very real chance that it trades lower into our range where we start incurring the losses. You see that once it gets to 105, the blue line, okay, is what happens at expiration, and you can see that once it gets to 105, you start losing money real quick, and your break-evens at about 103.75. Now, your max loss in this trade is the credit you take in, which is 126, subtracted from the entire range that you have the premium that you've covered to take the risk in. So you have a $5 area that you'll be the one taking the loss in. You've offset that with $1.25 in profit, so your max loss is $3.75. So you're risking $3 for every $1 in profit in this trade. Okay, that's important to understand, folks, because it's going to happen all the time, right? Nike's going to report bad numbers. This thing's going to tank. It's going to open at 97. And, yeah, you might be able to close out that trade at some profit, some equity, but you're going to lose a lot more than you could have gained. So you're going to have those losses, right? Set your risk reward on these types of trades. Larry says it often. It's not what you can make. It's what you can lose. On this trade, you can lose $375 per contract pair, okay? So what happened this morning is, you did get down movement, said let's let the market open and then sell off the trade. We didn't want to hold this thing throughout the week, right? We have some CPI data coming out. There's nothing to say this thing doesn't come down to at least the lows we had this week, if not lower. The market's sitting at 39.40. We were just at 3,600 and change. You better believe there's the possibility this thing dives lower. So let the market open and then sell off this trade after the options market at least finds a reliable bid and an offer. The options market, folks, never use a market order, okay? It's illiquid at times. And in the first seconds that the option market opens, there's so much volatility because the market is pricing everything right at that moment. So let it open, sell off that trade. And when the market was up at about 111, 112, that trade cost you to cover. Now, to cover a trade like that, right, originally we were selling the 105 put and buying the 100. So to close out a trade like that, you buy the 105 put and you sell the 100 put to close out the trade. That would have cost you about 35 cents. So we collected 125. We spent 35 cents to close it out. We end up profiting about $90 per contract pair. Not bad when you look at where it is. Nike, some pretty calm action. It's a cool trade, folks. If you haven't traded options, if I lost you a little bit in that conversation, okay, you can sign up for my newsletter, Rocket Equities and Options. You get a 30-day money-back guarantee. You can also check out the program Fast Market. They do an outstanding job. They set up trades like this all the time on the Thinkorswim platform, talking about volatility and interesting action on Nike. As you're down $1.56, you spike all the way to 114 on the open, and just like that, we've given back some of that acceleration to 109.20 on Nike shares. Nike up 41 bucks. S&P is now up 41 bucks. All right. I'm going to jump back to the Macau conversation real quickly. They'll be talking about Win coming up. Where are we here? Yeah, I mean, all the data I have, I can't find a good chart that goes back recent, but here's one example of what the chart looked like that I was trying to find. You have Las Vegas versus Macau total gaming revenue, and this stops in 2014, but you see the acceleration, man. Blue is Vegas, okay? And this is a random, I don't know where's this coming from, the fool. The red is Macau. Macau just dwarfs it, folks. Vegas is not growing gaming revenue. They're growing services revenue for people to do things other than gamble when they're in Vegas. Macau, it's straight gambling. We'll talk a little bit more about the differences when we get back. Stay tuned. We'll talk Tiger dollars when we get back to. Be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Quite a start to the trading day. We only have 2 more trading days in the month after this. Then we come into the long weekend, July 4th. Market coming in with fireworks to that July 4th holiday. Market right now up 42 points. We accelerate on the open, and we're holding those gains right now. The Dow up 362. Folks, if you head on over to the front page of TFNN, our Tiger Dollar sale. We only do 2 of these a year. You can get up to a 40% bonus on your Tiger Dollar purchase. Tiger Dollars can be used for all TFNN newsletters and services, folks. If you're thinking about signing up for any of our products, whether it's the webinars that we've been doing with Larry, my dad, Basil Chapman, whether it's just trying out any of the newsletters we offer, joining the Tiger's Den, everything we offer, folks, at TFNN, you can use Tiger Dollars for. They never expire. Once you apply them to their account, they're used automatically if you're out there as a current subscriber. current subscribers, easy way to lock in added savings, folks. Go over there, get your Tiger dollars, apply them to your account, and they'll be used automatically for all monthly recurring subscriptions until that number goes to zero. Then it would just revert back to your credit card. And I encourage you to check out the Tiger Forex report, folks. This thing kicked off yesterday with our man Teddy Kegstad. We had a great interview with him yesterday. We'll be talking to him tomorrow at 40 past the hour, as we always do on Wednesdays. Right now, you can sign up for Teddy's service. And he's got a newsletter out there yesterday, folks. It's going to come out once a week on Mondays. He'll have updates throughout the week when warranted. He will have trades in there when they present themselves as well. But you add the promo code TEDDY25, folks, and then you hit the apply button. You'll save 25% off of the subscription price for the life of your subscription, folks. And real quick, to get that number, it's $97 a month, $97.75. That pulls you down to $72.75 for the life of your subscription. And that money, that's still 30-day money-back guarantee. So try it out. Lock in that great savings. Give it a chance for 30 days. If you don't like it, cancel it. You got a money-back guarantee because we only do these types of membership promotions. Talking about a charter membership, folks. You do it right at the beginning. That's the only time we give this type of a sale where it carries for the life of your subscription. All right, folks, stay tuned. We got a wild market up here. S&P right now, positive by 1%. We got Basil Chapman up next. Stay tuned, folks. Have a great Tuesday.